Hello, everybody. Thanks for getting up at 7:15 in the morning for this early sunrise. I appreciate your dedication to see this presentation. This is a very simple story. We have a high-grade gold deposit in Quebec. More importantly, this deposit was discovered in 1940. Many different workers worked it, but it was very obscure. And the whole story behind this company is that this deposit that we're going to be talking about was sitting idle for at least 10 years prior to us picking it up. And what we did was, because it was obscure, there was no 3D models and stuff, we used artificial intelligence to help build the first mineralized model, geological model, and conceptual model for this property. So that was really exciting. When we did that, we brought this to the board of directors and said, look at this AI has really illuminated the exploration potential of this property that no one has really recognized before, just because everything was done in 2D space and the lenses weren't consolidated. So that's what this story is about. So we're quite excited about our acquisition here, and that we're going to go through with that. It's very simple. Disclaimers, forward-looking statements that everybody's aware of. Yeah, so when we picked it up, we had historical mineral resource estimate. There's over 100,000 meters of drilling that's been done in this property. About 8 different companies have come through. And in 2011, the last company to work the property had put a historical mineral resource out of 727,000 ounces of gold with an average grade of 5.42 grams per ton. But what we really liked about it was that it had an average thickness about 5.7 meters. That's pretty good. So when it comes to mining and stuff like that, we like to see thicknesses like that. We don't like to have narrow stopes. So from a mining perspective, it's beautiful. We're in a Tier 1 jurisdiction. We'll talk about that a little bit. It's in the southern Abitibi. Tier 1 means that there's multiple deposits in the region over 5 million ounces. Some of the deposits in the region are 25 million ounces. So it's a great jurisdiction. President and CEO of Agnico Eagle said, the southern Abitibi is not Nevada. It's bigger. So lots of opportunity here. That's why we picked up this play. We have identified the open pit potential no one's ever recognized before above this high-grade gold deposit. Now, from a historical perspective, people didn't think you could do open pit mining in the southern Abitibi. People thought there's too much water. But anyways, people left the region. Like in 2008, Barrick left the region to look for open pits. Now they just made a re-entry into the district in 2023, looking for open pits. Because since they left, you had Canadian Malartic, Detour Lake Gold. These are all big, large-scale open pits in the region. Greenstone just opened up, Gelatin in the area, and Cote Lake, just west of us, is developing an open pit. They're in production now. So yeah, all these big, large-scale open pits can be achieved, just like you see in Western Australia. They're mining in the same types of rocks. Our 2023 inaugural drilling program was highly successful. We had 10.8 meters of 15.8 grams per ton, 11.7 meters of 5.63 grams per ton. So we're seeing these really good intercepts, good grade, good thickness, everything we wanted. 2024, we drilled 8,100 meters. That's complete. Finished that last month. And as we get into this story, we're also going through the historical core that was drilled and sampling it. We're sampling the host rock. No one sampled the host rock. They only cared about high-grade underground gold deposits in this district. We also have a strategic investor, Rob McEwen. He's a billionaire. He started Goldcorp. He saw what we were doing. He loves technology. He saw what we were doing. And He liked our results from our 2023 drilling. He likes what we're doing because we're looking at other potential acquisition using this technology. So we have an aligned vision for the district and what we're doing with technology, that he took an equity stake in our company personally. And Rob McEwen, he sold Goldcore for a significant amount of money. Yeah, and they eventually merged with Newmont. So yeah, it's good to have him on board. And we have option to earn 100% interest in this project. And more importantly, we're going to do our first ever mineral resource estimate update in Q1 of 2025. So next quarter, we're already in the fourth quarter now. So we're gonna wait for all our 2024 drilling to come in and assayed, and then we're gonna incorporate that into the mineral resource update. We're part of the Metals Group of companies, so it's a great management team. It's led by an individual by the name of John Williamson. He's a serial entrepreneurial geologist. He's had multiple wins with 20 or so different companies. Some of his more recent wins that are happening right now are Founders down in Suriname and Benchmark Thesis in British Columbia. So it's great to be working with him. He's been in the industry 35 plus years. We have Sean Major, who's been his right-hand CFO. He's on this company as well. We have an independent director, Ian Harris. He helped sell Corriente for $690 million. So we also have Alex Horsley. I known Alex for about 15 years. One of the greatest investor outreach people I know. Happy to have him with this company, and he's our corporate development guy as well. So pretty excited. So who am I? Yeah, my name's John Florek. I've been in the industry about 35 years. First half of my career, I was in exploration. Subsequent half of my career was in production. So I worked underground at Hemlo Gold Mines for half a decade, and another half a decade I worked in the large-scale open pit, Detour Lake Gold. I just talked about big, huge open pit gold mine producing 700,000-800,000 ounces per year right now. A lot of the technology that I basically am using for this company was developed working for Detour Lake Gold on this open pit, and we made that deposit highly successful, my team and I. So we want to try to duplicate what we've done there here. Share structure, we have 111 million shares outstanding. Management and friends of management owns about 20% of it. So still pretty tight. We're incentivized, fully diluted 152 million shares. So this is where we're located. This is the southern Abitibi. All those dots you see on the screen are either development projects or producing mines. So you can see how we're in the mix of it all. We have a highway that goes right through the property. So the importance of that is this deposit, when we start getting into some of the slides, is that because of all this infrastructure, there's a lot of synergies here. With that, you wouldn't potentially have to build a mill. You wouldn't have to potentially build a tailings dam. And we know when you go in these development projects, you have runaway CapEx costs, but that'll save us like $1 billion of initial CapEx spend to build something like this if you use the existing infrastructure in the area. The mills in the region are under capacity and they're crying for feed. So we know that this is a viable option, and it might even be considered environmentally irresponsible to build another tailings dam when you have all the existing infrastructure in the area. We also know between us, First Mining, and Stellar, there's right in this segment of ground where we are on the, basically the little dots are, they connect and they're basically the plumbing system for these gold deposits. But right in our vicinity, there's about 20 million undeveloped ounces. And in the middle of that is a Holt Holloway mine owned by Agnico Eagle. So potentially that could be a source for milling and tailings. So I think there's a potential for another consolidation acquisition in this region we might be mixed up in. So this is the final conceptual model that was developed from our AI technology. So what we see here now is a large-scale potential open pit above this high-grade gold deposit. What's nice about the open pit is I could build ounces more rapidly in the open pit environment, because the last mineral resource estimate was done with gold cutoff grade at 3 grams per ton. In an open pit environment, I can mine an order of magnitude less grade, so down to 0.3 grams per ton. So you can see all those little green blocks. All those little blocks you see, that's a stope optimizer technology. We try to get minimum thickness of 2.5 meters for each block by 4 by 8 meters and give a grade to it. So that's what you're seeing there. So that's important when you're starting to talk about, an updated mineral resource estimate. We're adding ounces more rapidly because we're looking at the open pit environment. So right now the open pit's 1.8 kilometers long by 800 meters wide with potential to extend it eastward. There's the pit. Why do I say we can potentially extend it eastward? Well, look at these small satellite pits, and there's hardly any drilling out that way. These projects, just so you get some perspective, they take about 300 to 600,000 meters to drill. We only are at 100,000 meters. Each drill is adding gold to the model, gold ounces. We have this huge gap. Look at 1.1 kilometers away, we have the NIP zone, 16 meters at 6 grams per ton. Some of the intercepts are 17 meters at 3 grams per ton, or 2.5 meters at 51 grams per ton. And a lot of opportunity to drill and continue adding ounces in the near surface environment as well as at depth. This is what it currently looks like. Our drilling is magenta for 2024, just so you can see what we're doing in 2024. Basically, we're drilling inside the pit. Why are we drilling inside the pit? In the next couple of slides, you're going to see that no one has sampled the host rock of these high-grade lenses. This was traditionally a high-grade underground mining district. So nobody cared about 1 or 2 grams per ton or sub-gram material. But with open pit mining, we care about this material, and you'll see some slides shortly that express it. So what we're trying to do is add those incremental ounces that no one actually identified in the past to the open pit to lower the stripping ratios, improve the overall economics, and add ounces. And we also doing quite a bit of exploration to the east. As I told you, we need to understand how far east we can expand this open pit. So when you look at it you're looking north, so we could potentially bring the eastern end of that ultimate pit there that we showed there. That ultimate pit goes down to 400 meters. And so that'd be like, 1,200 feet or so. This is if you're from the United States. So pretty deep. And we know that mines lateral to us in this district, they're mining down 3 kilometers. So what you're seeing in this image here is 1 kilometer up. So we know that these deposits go deeper. So whatever we have here, say we build 2-3 million ounces of this environment, we could potentially times it by 2 or 3 for a total. A lot of the underground deposits in this district started at 1 million ounces. And by the time they were finished mining, they were at 10 million ounces. So they usually, when you go deeper, you have to develop and drill. So a lot of opportunity at depth as well. But right now we're focused on the open pit environment. These are some of the grades in the heart of deposit, just to get a sense of it. Look at that, 15 grams per ton over 14 meters, or 13 grams per ton over 19 meters. Or if you want higher grade, 22 grams per ton over 5 meters. So we envision a quick payback period. We don't have those CapEx costs. So we think it would be very good NPV and a very healthy rate of return. So yeah, it's a great project, and with all the synergies, we view it as a satellite potential deposit for supplemental feed for all these existing infrastructure in the area. So this is the ringer. This is where the light bulb's been off for us in our 2023 drilling. All the numbers in red are what historical workers would have sampled. Those are the high grade lenses that are only sampled in the historical core. No one sampled the host rock, and we're getting the green numbers and black numbers. Those are some of the grades in the host rock. We're seeing like 25 meters of 1.69, 24 meters of half a gram, or 13 meters of 3.8 grams per ton. They didn't sample it. So when we saw that, we were excited because we potentially have an open pit. You need width for open pit. The open pit economics that I showed you there, that ultimate pit was calculated at 1650, so that'd be the break even for anything. So if gold's over 1650, everything's economical to mine in that open pit. Now this is just a benchtop study, nothing's been published yet, but I just wanted to get an idea of what our exploration looks like and put that conceptual model to light. So anyways, that was pretty exciting for us. So you can see, if you look at the drill hole traces there, you can look at that legend to your left. There's unsampled and sampled areas. So you can see that a lot of those grade traces are in the pit shell, but the rocks haven't been sampled. You go back to the historical core on the right, you can see that it's rusty, and that rust is caused by sulfide mineralization. That carries the gold. And yeah, it might be 0.8 grams per ton, but that's highly valuable for an open pit environment. So we were like, wow, this is good. Let's go see what the rest of the historical core looks like. All rusty rock. Some of those zones I would have sampled regardless for high-grade gold. And look at that. Very impressive. So with our 8,000 meter drill program, we're also collecting 8,000 meters of historical drilling. So that's like free core. Sending that to the assay. So we have 14,000 meters of assays. We released about, for 2024, that are upcoming news releases. We've only released about 10% of that data. So we have quite a bit of news flow coming forward. Once all this data comes in, we're going to do our mineral resource update in Q1 of 2020-25. So stay tuned on that. This is just an example of our model. Here we're stepping out. This is how we're adding ounces. We're stepping out like 120 meters, and we're hitting. We're using AI technology to make these stope optimized shapes, and so these are little stopes in the ground. Here we hit, 10.8 meters of 15.8 grams per ton. So that's exciting. That's going to add a lot of ounces. Here we're drilling along strike. We're hitting 3.65 meters of 6.25 grams per ton gold. So yeah, we're excited. We're demonstrating to the market that we could add ounces. We said we could, and we're delivering. Here's the first geological model. Now, this is interesting. You gotta have trained geologists to use AI appropriately. In order to make this model, we had to sit down, spend about a month and a half, I don't know what it was, something like that, month or two, fixing the databases. I mean, there's like 150 rock types or so. You had to condense it down to something more simplistic because there's multiple companies working the property. So by the time you get in a proper shape and you know how to use the software, you plug it in, and we have the first ever geological model done in 4 months' time. Some companies are, it takes them 3-4 years before they get a geological model out there to the world. So yeah, that's exciting. I think to some extent, we're moving very, very quickly with our technology, that it's not recognized what we're doing, and we have a low CapEx right now. Anyways, here's what some of the rocks look like. I don't expect anybody to be geologists, but if there's geologists in the room, we like it because it's replacement style ore, which means that it's not a quartz vein that pinches, swells, and you lose it. It has good thickness. Miners love to follow this. I worked underground. This is beautiful rock. There's low fractures. You don't have to worry about underground failures or slope stabilities in the open pit. Not a lot of fractures in that rock, so it's good rock to mine. On the right is some of the stuff that people wouldn't have sampled, the quartz feldspar porphyries. That's where we had 25 meters, 1.69 grams per ton. So as I spoke, a lot of the companies that are analogous to us in the region, they're ranging between 50 to $200 million market cap. We're at under $10 million market cap. So we see a lot of potential for market cap growth with a project like this. Keep in mind, they're up to 600,000 meters of drilling. We're only at 100,000 meters, a little over 125,000 meters roughly. So that's exciting. More importantly too, for those who are economically sensitive, where we're drilling, everybody can go home at night, okay? So the cost for drilling here is very cheap compared to other Canadian exploration projects. They're ranging between 400 all-in cost per meter up to $800 to $1,000 if you go up to the Yukon or something like that. Here we're all-in costs are like $200, $250 a meter. So if you think about what we're trying to do, you drill another 100,000 meters and you compare that to an average Canadian project of, what do you call, $450 all-in cost per meter, you're saving $25 million. That $25 million is extra money going into the ground, not just, so it's great to be in this jurisdiction. It's very cost efficient and just, you know, gives us a lot of opportunity to grow and expand it in a market that's kind of tough. To every dollar you get, you want to make sure you spend it wisely. Oh, what happened? Can't move the slides, something happened. Huh, that's annoying. So this is what it looks like. We're about 75% cutting our historical core for this year, 2024. We finished our 2024 drilling. Our analysis, we still have a little bit of ways. Hopefully we'll have we'll have everything cut by, you know, third week of December. And hopefully all the assays will be in by mid-January, end of January. So that's 14,000 meters of assays to come. Then we want to do our AI remodel in Q1, and then we want to do an MRE on that. So that's our plan. That's our vision in the near term. And if you have any questions, this is perfect.
You said there was a lot of water in the area? What do you mean by that?
Well, you know, the southern Abitibi, it's in the Canadian Shield. There's trees and stuff. It's not Nevada. We don't actually have a lot of water on our property. It's to the south. So where we are, it's basically dry land in the woods. And there's actually a clear cut that was done over the property about 10 years ago. So easy access. And but we wouldn't have issues with lakes or streams where this open pit would be developed. It's actually, we would do modeling, like environmental baseline studies to monitor streams in the air to make sure there's no effect from mining in the future. But yeah, it's a very ideal location compared to other places. Some people are mining underneath lakes, and so we don't have that problem.
Can you go back to the slide that shows that highway, please, if you don't mind, the Porcupine pedestrian fault, I think is what I remember, right?
Yeah, no problem.
Folks, you might get a kick out of this. If you see the highway that runs, and I don't work for these guys, but they were nice enough to invite me for breakfast, so I gotta try to be nice with them, right? This is one of the coolest places you'll ever go in mining. I actually worked at Black Fox. I'm not sure if I ever told you.
No, you didn't.
What's really cool, we developed the Greenstone belt, and I was the IR guy for Black Fox, right? And I got such a kick out of it. I got a chance to go up there, pretend like I knew what I was doing. But the coolest thing was when it rained in that open pit, and it was the coolest thing. You could actually see the Greenstone belt through the open pit mine, but only when it rained. You follow what I'm getting at? Like it looked like somebody painted a green line through the actual open pit. So what's cool is all these people they put a highway along that green Greenstone Belt. Some of the problems I had to deal with, I remember one time the guys called me, they said, we got a problem, and I said, what's the problem? And they said, well, we just got the greatest grades we ever had in our life. And I said, okay, well, what's the problem? We accidentally drilled into the mine next door. So like it was a really sort of neat place to work. But what he's talking about the existing mills, that is really important right now. The two most important things I see in this business right now is, do the people want to talk to me? I've got a friend of mine, a fairly wealthy woman who owns 300 mining stocks. And for the fun of it, I called all 300 of the IR departments just to see who in the heck would call me back, and only 2 did. That's shocking. These guys will answer the phone in the shower. It doesn't matter what time you ever call them, they're going to answer. But the existing permitted mills and that, they're absolutely correct. There's a lot of them. There's no baloney in that. There's a lot of them looking for feed, and it's not a sales pitch. The big pitch for me is the average time in Canada to get something like that approved is about 27 years from the day you say, I want to build a mill and an infrastructure and everything else. It's about 27 years of screwing around. And the other attraction I see to this one is that you're just over the Quebec border. And maybe you're never going to have trouble raising money for exploration, because Quebec has something called, anybody here knows, you can't do it in the US, I'm sorry, but in Canada they have something called flow-through shares. Anybody familiar with those? No. It's really damn cool, right? So if let's say you made $100,000 that year, and if you put $100,000 and you buy flow-through shares in Canada, you can only do it in Canada, right? That comes right off your taxes. So I had a butcher friend of mine last year. He made $400,000 and he was in a panic at the end of the year. And I said, listen, here's a company that's issuing flow-through shares. He bought $200,000 of it, I'm kidding you not. And it took $200,000 right off of his taxes. But the company can only use it for exploration. They can't use it for G&A or anything. It has to go in the ground. And in Quebec, I think it's 115%?
130%.
130?
Yeah.
I sound like a game show host. So what that means is that for every dollar you put in, you buy for flow-through shares in Canada, it takes 130. You get a value of 130,000 off your taxes. So they're not only on the right belt, they're on the right side of the border.
But what's also nice in Quebec is when we did our 2023 flow-through share raise, all of our investors were outside Quebec. And then if you're a Quebec resident, you can write off 130% off your taxes. But if you're outside of Quebec, you can only write off 100%. So that 30% that was unused in Quebec comes back, kicks back to us as hard dollars. So we're expecting $500,000 to $600,000 back from the Quebec government. So that's free cash.
This is literally the Route 66 of mining. It's a neat drive. It's like passing motels, and they're all mines on the same highway. It's a neat spot.
Is your AI software proprietary? Is it open source?
It's just, yeah, software companies is MapTech. It's called Domain MCF. And I don't know, have you heard of Vulcan before and stuff like that? Yeah, that's the old Vulcan MapTech. So yeah, we're using them. They're very good. The people who wrote the algorithms are like from MIT, Harvard, and all that stuff. So the math is beyond me. I'm just a user of the technology. But I had a great team when I was up at Detour Lake. I had the software company when we were trying to figure out exactly how to use this technology in this type of environment. And so we had MapTech, a software company, had the best estimator in the world, geological estimator, Mario Rossi down in Argentina. He wrote the textbook on estimation. Literally, he did. Before that, I mean, we were just doing polygonal reserves. Him and his group developed Kriggan. So, and myself, I was providing the geological input. So we built these models that we fed through the mill that gave 20% extra revenue to a Detour Lake mine, which basically, because of these type of models that we were creating, led to Kirkland Lake taking over Detour Lake, and then eventually an Eagle grabbing the generational opportunity that Detour Lake Gold was, and those models now, when I look at that 20%, is like 350, with the gold price escalating, it's like $350 million of extra revenue per year for life of mine. It's crazy. These gold companies are highly leveraged to the gold price. And so that's exciting because that'll trickle down because they're making record profits right now. Yes?
When it comes to AI, does it just help you, is it just an algorithm that helps you, or is it training? Is it training data too? I mean, are you,
Yeah, so,
are you helping train this algorithm for you and your specific site, or is it,
yeah, it trains itself to some extent. But the thing, like I said, it's not really smart unless you have experienced users behind it and experienced geologists who know the models. What is the gold models you kind of look at? What is important? What are the important rock types? Like when you get a database, there might be like 150 rock types. You got to consolidate that down to like 15. Otherwise, you're going to have an incoherent model. So you need people to understand, look through the data and say, okay, this rock type, he means this, and try to bin it out appropriately for the program so you can actually have a coherent model. And then basically, once you assemble it, you plug and play, send it through the software, and you just press enter and it works its magic. And then you can go back through each cross section, drill hole by drill hole, and see if it makes sense. And it does, and if it's making sense, that's the model that you choose. You can change the parameters in it. And we could have 5 different working models, and we drill a couple holes. Overnight, we rebuild those models for our exploration program and say, well, model 3 is working best. Let's follow this for our next drill hole.
so the geologist train the model, basically?
Yeah, exactly, yeah, sorry.
Question about the cost. Say the cost is very cheap.
Yes,
What's the reason behind that? And is it going to continue like this?
the cost for drilling?
For their ounce of gold?
Oh, per ounce of gold? Yeah, I mean, the cost is relatively cheap.
Because of any reasons? It's cheap.
Well, some people think we pay too much, but others, if you think I think we got a good deal too. I guess people didn't see the opportunity that we see, so we structured a deal that was work in our favor. So yeah, we're quite excited, and we thought we got for a reasonable price, and we had the vision that we think we can grow, and no one even had the conceptual thought of a big open pit over this high-grade gold deposit, and no one put this into 3D. We were able to do it and illuminate the exploration potential. That's what we're showing here today. So we're really excited. There might be misunderstandings of this, but we're moving so fast. We did all this basically in the first year to some extent. Now we're in year 2. And other companies would be at a 5-6 year stage, and they would get the IR and marketing out there over time. And we're just advancing this pretty rapidly using this technology. So yeah, stay tuned to see what happens. And like I said, this year's drilling won't be as sexy as last year's, I don't anticipate, because we're trying to get that low-grade bulk tonnage material, sub-gram material into the pit, because that's so important for our mineral resource estimate update. So we want to do that. So we're not chasing necessarily the high-grade underground narrow vein stuff. We already have some of that in the near surface environment. We're trying to get that low-grade bulk tonnage stuff. So don't discount what we published. Like our last press release is like 52 meters of 0.8 grams per ton. That's huge for us. We already know we have the high-grade lenses. We want to identify the low-grade material to add for our mineral resource update. Yes?
That's the average grade per ton on the planet, actually, of a producing mine is 0.8.
Okay. Well, yeah, I detoured the mining down to 0.3. Goldex mine in the district, we have a drill hole here in this low-grade bulk tonnage of 25 meters or 1.6 grams per ton or so. The Goldex mine is at 1.62 grams per ton. That's an underground mine. So not only do we have we have multiple scenarios to grow ounces. We have the open pit environment, we have the high-grade underground gold environment, and we also have low-grade bulk tonnage, because we're identifying it now for underground, like the Goldex mine that Inigo owns just to the east of us. Yes.
One of your maps had a box on the east side showing a geophysical survey. What are you using? How do you calibrate?
I wonder why this is not working. I can't move the slides for some reason all of a sudden. We did some magnetic, we flew some magnetics, that's what you would have probably seen. There's some historical IP resistivity over some areas. We had some in the NIP zone. You look at one of our press releases. We drilled the NIP zone. That's where you saw 16 meters or 6 grams per ton and stuff like that. We had these huge chargeability anomalies. So not everybody drilled all the targets that the IP were there. So right now, a lot of the exercise is following the geology and extensions of the known, which is pretty following plunge lines and using the structure to actually increase ounces.
So do you use that geophysical data then to help build your AI model and extrapolate?
No, we haven't yet because we're an advanced stage project, right? We already have a deposit. Like a lot of these AI models that are people using in exploration, they don't even have a single drill hole. We have over 100,000 meters. So we're basically using AI to build us the geological 3D model of the mineralization and the geology, because we have a lot more information than you would see in other programs. So we can use that in the future, but you know, when you know where to go, because you already have the drill holes, you don't have to rely on geophysics, you can just rely on the geology. Does that answer your question? Okay, perfect. Yes?
How did Rob McEwen find you guys, or how did you find Rob McEwen?
Oh, yeah. Alex called him, and he answered the phone. So that was great. And next thing you know, I felt like I was being called to the principal's office. He said, "John, Alex, get up to my room in Toronto." So we sat down with him for 2 hours and had a discussion. It was funny because I said, "Rob, I followed your career forever because I used to work in Red Lake for Placer Dome, and he picked up the Red Lake deposit and he had that big discovery, built his fame and fortune." He said to me, "Whoa, you're the competitor, you're Placer Dome." And I was like, I was just a young geologist, but he was funny. So, great little story. Any other questions? Well, thank you then, and if you want to sequester my time anytime, just swing by, talk to me here at my booth. Now we have prizes at our booth, so make sure you drop your business card off and fill it out so you can take a bottle of cognac, limited edition. Actually, it's not being produced anymore, so you can put it on your shelf and age it for the next 50 years, I don't know. So yeah, swing by and we can talk more. So thank you for attending, I appreciate that. And have a great, well, thank you for getting up so early and attending this. This is great.